Thank you for joining us for our financial results for the half year ended December 31, 2020, a period that saw us continue to navigate the ongoing uncertainty of COVID-19. Our response remains focused on keeping our people safe and well, maintaining safe and reliable operations, and supporting our communities. Too many of us have sadly lost friends, family and colleagues to the virus, and we continue to support our people through this challenging time. The most important commitment we make is that everyone goes home safe and well at the end of every shift. While we have seen a strong improvement in our total recordable injury frequency rate since FY16, we are not where we'd like to be for the year, and we are working hard in this space. Despite the ongoing volatility in commodity markets and supply chains, our teams around the world have worked tirelessly to deliver a strong operating result with 3 production records for the half at Worsley Alumina, Brazil Alumina and Australian Manganese, as well as lowering operating costs of the majority of our operations. Looking ahead, we have increased our FY21 production guidance at Cannington, Illawarra Metallurgical Coal and Cerro Matoso. Additional volumes, combined with other cost efficiencies across our operations, are expected to partially offset the headwinds of a weaker US dollar on our operating costs in the current half. Moving to our financial results, we generated an underlying EBITDA of US $633 million at an operating margin of 23%. Lower controllable costs and higher sales volumes helped offset weaker prices for many of our key commodities, including metallurgical coal, alumina and manganese. Free cash flow from operations, including distributions from our manganese business, was US $188 million, and we finished the period with a net cash balance of US $275 million. The balance increased to US $452 million by the end of January as a temporary build in working capital unwound, and we continue to see a rebound in prices for some of our key commodities. Reflecting our strong financial position and in line with our dividend policy, the board has today resolved to pay a US $67 million interim dividend, representing 49% of underlying earnings in the half. Demonstrating our confidence in the outlook for the business, the board also increased our capital management program by US $250 million to US $1.68 billion. This leaves US $259 million to be returned by the 3rd of September this year. Our disciplined approach to capital allocation balanced shareholder returns with investment in our business. At GEMCO, a feasibility study is underway to extend the mine life by developing the eastern leases, and we recently restarted exploration in the southern areas. The rollout of the AP3XLE energy efficiency project continues at our Mozal aluminium smelter, with a feasibility study underway to consider using the same technology at our Hillside aluminium smelter. At our Cerro Matoso nickel operation, we have approved an accelerated development of the low capital, high grade Q&P project, an ore sorting and concentration project that has the potential to further increase processing capacity has been progressed to feasibility. At our Illawarra Metallurgical Coal operation, we are considering our options following the State Independent Planning Commission's refusal to grant our application to extend the life of the Dendrobium mine. We continue to engage with all our stakeholders and will update on our next steps when we can. We continue to advance growth options in our portfolio that have the potential to increase our exposure to metals essential in the world's transition to a lower carbon and greener future. At our Hermosa base metals project in Arizona, we expect to deliver a pre-feasibility study for the large polymetallic Taylor deposit in the June quarter. We are also advancing a study at the Clark deposit to test its potential to supply the manganese chemical battery market, with completion expected in the December half. In Alaska, work at the Ambler Metals joint venture continues as we plan for the next season's regional exploration program and advance a pre-feasibility study of the high-grade polymetallic Arctic deposit. Our focus on exploration continues, building our pipeline of potential projects, We now have more than 20 greenfield exploration partnerships around the world, from Ireland to Peru. As always, our allocation of capital to each of these growth projects will face the rigour and discipline we apply within our capital management framework. Each project must compete with other uses of capital and deliver lasting value to shareholders. Demonstrating this disciplined approach, we recently placed Eagle Downs Metallurgical Coal Project on hold after the feasibility study did not meet our investment criteria. We are assessing our options for the project, which may include a sale of our 50% stake. Our portfolio transformation also includes exiting lower returning businesses, and our planned divestment of South Africa Energy Coal is moving forward. We received key approvals in the half, and while material conditions remain outstanding, we are targeting the end of March for the sale to be finalised. We have completed the sale of Temco Manganese Alloy Smelter in Australia, and also acted opportunistically to sell a portfolio of non-core precious metals royalties for US $55 million. We have made significant progress on advancing our climate change initiatives as we progress our journey towards net zero emissions by 2050. We are on track to achieve our 5-year Scope 1 emissions reductions target in FY21, and we'll release our new Scope 1 and 2 targets later this calendar year. We're off to a strong start in 2021 as we continue to build on our recent operating performance. We are now seeing a rebound in demand from markets outside of China for some of our key commodities that is underpinning a recovery in prices. Our balance sheet remains strong. Key milestones for the improvement of our portfolio are nearing completion, and we have further increased returns to shareholders. Looking ahead, we remain committed to our purpose and delivering value for all our stakeholders. Thank you.